And welcome to Valil Capital. First of all, I am wishing you all a very happy Uttarada Dinashamsagal. Let's move on to our topic. Is bank deposit still a go-to option for you? Are you still using the traditional vehicles like savings bank account or fixed deposit for regular needs? Did you know there are superior alternatives available that would provide the money market returns into two savings bank account and high liquidity and also the tax advantage? That superior alternative is low duration fund, which invests in a portfolio of debt and money market instruments with short duration of 6 to 12 months. Now I am going to present the ABSL low duration fund. Enhance the gains due to the daily compounding and ready liquidity. Enjoy the benefits of higher returns than the savings bank account. Well poised to benefit from the current market scenario. Types of money market instruments. There are several types of money market instruments, and the first one is treasury bills or T-bills. They are issued by the Reserve Bank of India on behalf of the central government for raising the money. Commercial papers, certificates of deposits, repurchase agreements, and also the banker's acceptance. Where is the opportunities? Even as the RBI reduced the repo rate by 115 BPS to 4% and reduced the reverse repo rate to 3.35%, the repo versus the G-Sec spread remains elevated. We have seen that the yield railing over the last month across the curve, CD rates has a notable rally of about 90 BPS. RBI is maintaining the accommodative stance and is ready to do whatever it takes to revive the growth. Interest rates in the economy are likely to go down even further in the coming quarters. Investing now in a high quality portfolio at the shorter end of the curve would be a suitable option for a consecutive investor. The portfolio churns rapidly owing to short maturity instruments, that is, limiting downside when yields harden. Shorter is better. In the current economic scenario, the investments in the short-term instruments are well placed, carry lower interest rate as well as the lower credit risk. The inflation is cooling down. Inflation has started to come off from its highs. CPI inflation is likely to meet the RBI target of 4% very shortly. The core inflation is expected to fall to a range of -5% to -10% considering the sharp fall in crude oil prices and falling economy. The rural India is not impacted much by coronavirus. Thus, the supply of the food will likely not be impacted and the food inflation is also at a risk of seeing a sharp fall. Now, the India's growth rate is slowing down. The COVID-19 outbreak has disrupted the global business activity. Recovery may take more time as companies struggle to overcome the losses. Easy access to credit, supportive RBI and huge stimulus package of Rs 20 lakh crore will act as a tailwind for growth revival. The macroeconomic indicators hint volatility at the longer end of the yield curve and uncertainties in credit space. Timid economic outlook can impact the demand of long-term bonds. Aditya Birla Sun Life Low Duration Fund, an open-ended low-duration debt scheme investing in the instruments with Macaulay duration between the 6 months and the 12 months. That is, a positioning as a low-duration portfolio investing in debt and money market instruments. Macaulay duration of the portfolio will be in the range of 6 to 12 months. Ideal of the short-term investment of 1 to 12 months. The key features are the following. The invest in high credit quality and short-term maturity instruments, line certificate of depository, commercial papers, treasury bills, CBLO, etc. Intends to provide the investor an avenue to park surplus funds for short tenors along with the potential to earn the reasonable returns. Highly liquid in nature with liquidity available at T+1 basis and is suitable for an investment horizon of 1 month to 12 months. It takes most of the available opportunity. The fund focuses on high credit quality, liquidity and the high risk adjusted returns. It takes most of the available opportunities. The fund focuses on high credit quality, liquidity and high risk adjusted returns while building the portfolio. Well-diversified portfolio of over 108 securities provides ample liquidity. Over 80% of the portfolio is invested in AAA and equivalent rated securities. The fund maintains low modified duration of less than a year, reducing the interest rate risk and improves the fund's agility. Limited allocation to government securities shields the portfolio from sudden yield movement as well as ensures enough liquidity. Benefit from current spreads by investing in mix of corporate bonds, bank CDs, bank CPs, floating rate notes, etc. When positioning for the benefit from available opportunities. Why you should invest? The following are those points. That is, conservative positioning. The fund features lower on interest rate as well as lower on the credit risk. Ideal vehicle for parking the lump sum from 1 month to 1 year, provides high returns with low risk. Superior alternative to short-term bank deposits. The fund offers 100 to 200 bps higher returns compared with the bank deposits as well. The best suitable as stepping stone while doing the systematic transfer in equity schemes. Also, the best suitable to use as a destination scheme for the systematic withdrawals from an equity scheme. Suitable vehicles for building an emergency fund. And that's all for today. If you people are watching for the first time, please hit the bell button and also subscribe our channel. Please share it with your friends and relatives. Once again, I am wishing you each and everyone a very happy honor from Viral Capital. Thank you.